Good morning, traders. I hope everybody had a great weekend. Ryan is taking a bit of a week off, a bit of holiday, spending with the family. I hope we will have some decent rest to come back to us fresh and excited next week. Welcome everybody to what is promising to be a very busy week. We already had a very busy weekend. I'm going to obviously run through everything that's been going on. But before we start to look at all of this, just a reminder that we are offering some very cool discounts, the anti-inflation discounts, as we call them. For every monthly subscription, you can now enjoy a 40% discount and no time to waste to sign up to our platform, because since there's a lot going on and we have a lot of really great traders in there, great colleagues and traders helping each other out every day. It's really one of the best communities, if not the best, to be in right now, obviously. So take advantage of this cool discount. We also obviously are still running our trader funding program. Many people are joining us in the community as well. Since you depending on the account you take, you will have an access to our trading community as well. And I can say that many come and not many go afterwards. Everybody stays for the ride. We also still have this our move from trade forex analytics into trading analytics. And if you want to stay updated on all the news related to the evolution of our forex analytics community, just sign up with your name and email address. You will also be enlisted. And I think this week the come for the two trader funding program accounts is coming to an end, so that will be announced very, very soon. Also, on the 7th of August, we will do a very big risk management webinar, and you will need to be signed up as well for it, because only the people who are signed up and on our lists will be able to have live access to that webinar that we are going to do. Virtually the whole team will be on there talking about how they trade and how they risk manage their positions, which is really the most important what there is to do actually once you are a trader. Clicking the buttons to sell and buy is not difficult. Managing the positions once you have done it is a lot more. So you will be enlisted to listen live to the webinar if you fill in your email here. For those who are already enlisted, no need to do it. For those who have our newsletters, no need to do it an extra time. You will be already on our lists, okay? All right, let's see what's happened and what is going to happen. And before we talk about the main event, obviously, that happened over the weekend, let's run over to a couple of other headlines that happened. There are not too many, yet a few interesting ones. And start with China. If they all get there today, the US and China should start to talk again, because it still needs to be confirmed, but there is an extension of 3 months, 90 days coming, during which the Trump administration is really hoping to strike a deal with China. We know the reluctance of China, Xi, to get involved too much in all those trade talks right now. He was rather negotiating with other countries, under which the European Union, by the way, but nothing really apart from a few structures came out of that so far. We know about the difficulties between China and whoever of the other big blocks to come to agreements. But anyway, those US-China talks should pick up again from today for the next 90 days. The 90 days is probably an extension beyond the 1st of August deadline. So that's going to leave them quite a bit of time to come to some sort of an agreement if they can. Moving over to Japan, there are still pieces of the deal needing that they struck with the US needing to be ironed out. It is not completely done yet, but in the meantime, Kato was on the wire saying that the 15% tariff agreement that they have to how shall I say, to meet the payment or the price of it, in at least in parts, they will need to find, the Japanese government will need to find buyers for an additional 60 to 70 trillion yen in JGBs, which is about, give and take, 400 to 500 billion dollars worth. And then on the political front, and Prime Minister Ishiba is trying extremely hard to stay on, but they have had this LDP heavyweights meeting today, and quite a few of the LDP main participants or main members of the ruling LDP party, which lost their majority, as we know, last week, they want him out. So we need to really watch very carefully what's happening on the Japanese political front, even though Ishiba may still find some takers to try and iron out the rest of that trade deal with the US, try to find some kind of working group, let's say, to continue for a while. His days as a prime minister in Japan may be counted very soon. Okay, so this is something for those people trading yen that we need to keep a very close eye on, because we know that some of the LDP members, for one, are harder liners than himself, but also that if they need to go in ship with some of the smaller parties, there may be some issues coming on the fiscal side as well in Japan, which may in turn impact the yen as well on the back of probably diminished confidence in their fiscal abilities to keep spending under control. What else? Yeah, on the geopolitical front, Israel has declared a tactical pause in the Gaza to create humanitarian corridors, but we never know for how long that's going to last. So this is something which is, on the face of it, a little risk positive as well. But we already know that Israel declared that they are not done over there, nor are they done with Iran. So I'm not sure how long this pause in Gaza, they didn't call it a truce, but a pause, for how long this is going to last. Okay. And then oh, yes, in Taiwan, there has been let's say, a campaign to try and unseat lawmakers who are pro Beijing, but that campaign failed actually. So there is they have handed Beijing and the opposition some new ammunition against President Lai, and maybe that is going to hamper Taiwan now to deepen their government from strengthening defenses against China. So there is something that we also need to keep an eye on for the potential tensions in the South Chinese Sea that we know that are continuously ongoing. Then we had some lines, and then I'm slowly coming to what the big point of the talks are right now. ECB Cipollone said that the economy is sending conflicting signals in Europe, so that he's a bit worried or unsure about what the next move of the ECB may be. Negative vibes in the economy will probably put him on the cutting side of things, but he's not really sure of what's going on. And then what happened on between the EU and the US? They signed a deal yesterday. Big announcements by Trump and von der Leyen. The EU and the US reached a deal, but again, it is the structure of a deal because, as we've seen even over the past couple of minutes actually. The some of the US officials are still talking about tariffs or reductions in tariffs on wines and spirits, etc. So there are still a lot of details to be discussed and negotiated. But basically, the structure of a deal looks like the US is going to impose a 15% tariff on EU goods, and that means that even for cars, they are going to impose a 15% tariff, which is obviously less than the 25% that or even 30 that the EU was facing for a while. Also, the EU signed an agreement to purchase up to $750 billion of US military, LNG, and all those kind of things. So this is with, and again, we don't know the details over what kind of time span that is going to happen, but a lot of those planned purchases, as we know, EU is really beefing up the spending on defense. A lot of those purchases and the LNG as well were already in the pipe. So we still have to find out exact details about how much of that 750 billion is really a big increase of purchases from the US. Also, the EU agreed to open the EU countries market for other goods with zero tariffs, but that has already been a little bit. I mean, it's not going to be zero because we heard now that they agree to cut the car import duty to 2.5%, which is obviously a big cut, which is great for the US, but it's not really zero, right? I mean, it's not going to be a complete free ride for the US, but there is this other thing where I was a bit actually reluctant to think that that may be possible because after the US Japan deal, we heard that Besant was saying like, oh yeah, the US Japan deal is a very good blueprint of what we can do with other countries, and we were discussing in the room as well on Friday what that could mean for EU, and I was pretty reluctant in thinking that EU could sign an extra investment deal with the US. Again, we don't know the details. We don't know the time span. We don't know who is going to build factories or whatever in or plants in the US. But even signing that investment deal, $600 billion worth. Obviously, EU is a bigger bloc than Japan, but it's still a hefty amount. And all of that leads me to think that the US deal on the face, it's obviously a win-win for both. But because of the signing of a deal, obviously with the EU, it could have been that we went to the deadline without a deal, and then it could have ended up being a lot more messy. But it's clearly a bigger win for the US, I would say, than really for the EU, especially that the EU is really pouring a lot of money in the US and agrees to pay those 15% tariff. So this is also what, and we will have a look of obviously at what's going on in markets, but this is also the reaction of the market. So on the face of it, win-win for both, but I would put the win more in capital letters for the US. And I've also renamed the TACO trade, where Trump always chickens out, to the new TACO acronym could mean they all chicken out in front of the US. Now we see after those smaller deals that the US already did, Now we also see the bigger blocks really giving to at least big parts of the demands that the US formulated. So this is a bigger win for the Trump administration, in my opinion, than for the EU. And we already had the first reactions on the back of it. And just going to stick to the main ones, we heard from the German VDMA Federation, which is the engineering federation in Germany. And they represent a lot of car makers. They represent virtually 3,600 companies, and they were really not impressed with this deal. They said it was going to cost car makers and other industries and industrials billions and billions of euros. This car deal, this U.S. trade deal. So they are not impressed. And then we had the French trade minister Saint-Martin. He also came out already saying that he calls the deal very unbalanced. And then the latest one was the French Prime Minister Bayrou. Well, we never know how long a French Prime Minister stays in place, but at least he has these little comments on the trade deal, saying that the trade deal represents a somber day for the EU, and he calls it that and he said that the EU has been forced into submission. And it's not far from the market reactions that we see right now. And yeah, I tend to, maybe not a full submission, but I tend to agree that, as I already said, the deal is much better for the US. I guess von der Leyen is going to have a lot of explaining to do in front of the European Parliament, or we still need to see a lot of those details of the deals coming through, and so we will have to wait a little bit longer. Sticking on the trade front, Prime Minister UK Prime Minister Starmer is meeting with Trump as well today, trying to iron out some more details on the UK-US trade deal. We know that there is still quite a big sticking point, and that's a global one on steel, for instance. And the US has already said that steel may not be part of the talks between Starmer and Trump today. So we will have to keep a close ear to what they say. I guess they will meet early afternoon or so. I haven't heard anything from the meeting yet. And then they will talk about Gaza and Gaza, Israel, and Ukraine as well. We know that the US we're open again to the idea of supporting Ukraine, but not directly via NATO. So I guess we will hear a bit of that as well come this afternoon. Right. What have we had and what will we get this week? It is, as I said at the top of the show, a packed week. And so first of all, running back just quickly through back to Friday, we had those durable good orders, but they are very up and down. Some big give back of last month they are seen, but really durable goods have not much more impact than the usual algo blip, I would say, at the time of production where we get those numbers. The Atlanta Fed GDP now, the nth revision Q2, and we'll probably have another 15 more before they make up their mind on the final number. We had the CFTC report, as we've already been saying many times. It is only a part of what the market is doing. Not everything is taken up in there, but we note relatively sizable euro long positions. I guess some of that may look a bit fragile this week, but we will see. Obviously, those are delayed data as well. Those are taken, I think, if I'm correct, on last. Was it not last Tuesday or Wednesday or so? So those are not even end of week numbers. We've had just a very, very light calendar up to now. Today, the calendar is also relatively light. We're seeing like the Irish GDP numbers coming out in a little while. Those CBI distributive trade survey, they are usually a bunch of miserable people, so that thing is not really expected to show too much of an improvement, perhaps. They tend to just be a negative number, although it is expected to show a better number as last time, because we had obviously that structure of a trade deal between the UK and the US. So let's see where that comes out. Light-ish calendar for the rest of the day, as I said. We do have the Dallas Fed Manufacturing Business Index. Then we have a bunch of auctions. This week's auctions are short and the belly auctions, okay? So they could always have a bit of interest because we know that the US Treasury is concentrated on the bills. So there's quite a bit of money floating around there. So a lasting impact, I would not say, but they could have something to do. And I would say, look at anything, those twos, fives, and I think tomorrow also we will have the 7-year auction as well. And then from tomorrow, gradually, we are going to run into month end, first of all, and with the usual speculation about what's going on for dollars. I would say personally, looking at the U.S. markets, we may see, but that's on the tip of my toe, on the tip of my toes, we may see some mild dollar selling towards the end of the week, but I'm not going to trade anything of this now because we still have to get over the hump of the value date end of month first tomorrow, where we could see some U.S. corporate involvement, and then we have a slew of data starting as well. We do have tomorrow the UK credit numbers, but then it starts in all earnest on the US front as well. First of all, we will have obviously the jobs report tomorrow. We will have the consumer confidence also tomorrow, bunch of housing data also tomorrow, and really that's going to kick off really the end of month, what the flows are going to give us, and based on as well what the US jobs report, the job market, sorry, looks like. Going into Wednesday, we will have Australian CPI, quite important, I would say, because Bullock still is erring on the side of caution against cuts. But if you would get a real lower CPI coming in here, that may give the market a hint to that the RBA may be taken over the edge to start cutting again in August. We will have a European GDP data, French GDP, and then we will have German GDP as well, Italian GDP, Dutch GDP. So a lot of European GDP data coming out on Wednesday. For the Eurozone as well. And then we will have obviously the ADP as well, and also the US GDP. So as you can see, as we hit Wednesday, it's really going to go crescendo for the week. Okay. We will also have some Japanese data on Thursday, and then on Thursday as well, we will have another round of French, German CPI data, and also will we get the weekly unemployment data in the US. And on Friday, then, am I already on Friday? No, Thursday, we will have that. Oh, where's my Friday gone? Hmm. I think, well, but on Friday, as we know, it will be the big NFP report. Okay, so as we can see, it's going to be an absolutely busy week. Okay, So we will need to be prepared, well rested to go into the rest of the week. And as this week progresses, we will also still have a lot of US earnings report dropping. So it could be really a week of intense and very heavy moves. Although when we look at the options market that I usually like to do, the options market is still not really very impressed about the outlook for this week's move. But we know that because like look for instance, like if you look at the 1 week euro dollar vol, it's still somewhere around 8%, which is not very big expectations for hefty moves. I would say perhaps this week they may be wrong in underpricing the potential moves that we have because of the mix of so many data that we have, and also still trade talks where we need to get details. I think we will also get some really heated discussions in the EU Parliament, as we have already heard from some European officials. They are not really very happy about the deal. So I guess this week, or I trust this week, is going to be a heavy one. So where are we going then on the currencies and on perhaps some of the metals as well? I will also have a look at it. So that is what happened on the euro today so far. I'm on the 1 hour chart, as you can see. I'm gone on a little bit shorter one that I usually look at. We had that little opening a bit higher than the Friday's close on the back of the EU deal. But I also and then we were talking, as the more we talked about it, and the more I thought about it, the first reaction was like, okay, this is a positive one for the euro. We also saw the euro crosses move higher, but then once you look a little bit at who really is the victor of in this trade deal universe right now, and especially also versus the euro, we've seen those. It's really a better US, a better deal for the US, and the market then quickly turned around this morning. Me personally, too. Well, as soon as I opened an eye, early days, I sold some euro dollar as well against my euro crosses. Took some more of my euro crosses off too, because this deal does not actually impress me too much, okay? Especially not from the EU side. And then we have to look back at the costs. We have to look back at how anemic the growth is still in the Eurozone. Will this be really supportive for EU growth, or are they actually going to pay the price for it, literally, okay? So the market really turned around as soon as the EU walked in. We saw the euro dollar start to lose steam. I don't know what's happening with my trading view. I don't know if you guys also have this, but as you can see, it's pretty jumpy on my screen. So I'm sorry for that, but I'm going to have to relaunch trading view after this show. We dumped through this little level here, but mainly it was we were talking about this 117.10, 117, the figure that really gave way in a big fashion. As I said, also help with euro crosses coming down. Those who actually rallied quite significantly, they also came down. We will have a look at those as well. All of that is now weighing on the euro dollar, and we are right now trading in that support zone here, which was resistance, which was a traffic zone. As we can see before, it's been traded quite a lot, this 116 60 70 zone all the time. So this is a relatively important one, and now we will have to wait and see what the US wants to do with its own currency. But this to me doesn't look great for the euro, really. As I said, I'm a bit short. I really think that the market bought it. This is your typical buy the rumor, sell the fact. Now, think back on what happened in the yen. We had a bit of uncertainty weighing on the yen, but then as this finally struck a deal, we had a bit of a bounce in the yen, and then it gave it back everything. Well, it starts to look pretty much like the euro could actually be in for the same round here. And I guess that any bounce now in this give and take 116.95, 117.15 zone, we're going to have to monitor very closely. But it's possible that any bounce here is going to get sold into to start the week. And then I'm also thinking, will the market want to run long euros in whatever needs to happen at the end of the week? Imagine that we get again those US data defying the laws of gravity, just holding up where they have to hold. People will compare them to what's happening in the eurozone. Um, I don't think people will really want to hold too much long euros, but the battle is not lost, right? We are still overall, if you look at it from a little bit of a longer term view, we are still overall still trading in a relatively big market, and I would say that would continue to be the case until we even trade down to 115, globally speaking. But in the short term, I would not be surprised. We start to because people were looking at this as a bullish flag, which has been broken. But I wouldn't be surprised if we before we look around and really think about what may happen. I would not be surprised if we get back down to levels much closer to this low end here, and then I'm thinking about 116.20 or anything somewhere in the 115s, and then we will see whether we continue to range trade all of this, or indeed, and that will be depending on European and US data, okay? And then it'll depend whether we need to look at the big picture again. Keep it in mind, okay? Because if we ever break down below 115, there will be probably some more medium-term position holders feeling a bit of pressure. But I think we can. So that is the way I look at it right now. Watch this zone. If we break back above significantly, then we are probably going to trade with a more positive tone again. But for now, it looks a little bit in danger. All right. Cable, brand, cable. Since last week, we saw this difficulty for sterling, and euro sterling was rallying as well, the biggest barometer of sterling weakness or strength. Since last week, it's struggling, and but we also know that 133.65.75 is a very big level of which it bounced a number of times now. So this is your big support level still to watch. Okay, so now it will depend on what the US wants to do with their own dollar, but the sterling is doing better against the euro, doing better on the cross side. So that is why sterling is not really capitulating is a big word, but not really trading a lot lower, but it struggles with the bounces. So your first level on the top side here, I would say 134.5. Then you look at 134.65 and then 134.80. Those are going to be, I reckon, relatively decent resistance area. 135 may be, looking at how the dollar trades today, a, a stretch too far, but it's going to be an equally important level, obviously, on the day. But what if it breaks 133.65.75? Then I think we could see a relatively fast move down to 133, the figure, maybe even the 132.25, 132.5 zone on the cable. Don't forget, Starmer is meeting with Trump today, so there could be a bit of impact on that for sterling, whether it is positive or negative. Euro sterling. Well, I've wrote it. I've took some off. Luckily, again, in this run up, I took a few off as well. And then on the back of the uncertainty surrounding the EU trade and me not thinking it was that good, I placed a very close trailer below the mark, and I got trailed out of the rest of my long. I'm going back into neutral on this one, although Again, the global picture, bid, but can it correct? We are on a support here, just around 86.90 figure. We are right in the middle, 86.95. It was the prior high here, prior high here, prior high here. A move below could set off around maybe a round of stops, bringing us lower to 86.70 or even 86.5. There, I will make a decision whether it's good to have it again, if we see it, of course. If it's good to have it again and pick up this more medium term move higher, or whether the euro is really not strong enough to support a move back higher in euro sterling, and we need more time to work this off, and yeah, maybe even go back down to 86 the figure. We will see what happens there. I will clean up this more medium chart for the rest of the week to have a look at it. But for the time being, it's all about the euro, okay? And we are seeing this in maybe to a lesser extent, because there we are still trading above the broken bull flag. But even in the euro yen, we lost about a small big figure right now. This one is different. This one is really different because I think that yen as such will continue to struggle. So I'm keeping like a very small position there of what I had, and but I also legged out of some because of the euro relative weakness today. But we're coming into some sort of supports, a bit like the euro sterling. Yeah, prior highs around 173 the figure. I do think though that there is a potential that we get back down to levels like 172 and a half, 172.40 before looking back. But be careful what you do with the yen. I know a lot of people like to trade euro yen from the short side, but don't forget what's happening to Ishiba, right? If they need to really find the solution there without Ishiba, the yen could become very, very volatile. So I would say keep your positions under control, right? If you do yen. 172 and a half, and then we'll be looking at 171.80 or so in the euro yen. Obviously, if we start to tackle the highs here around 174, then it opens the way to go back to that prior high 175 and a half. But for the time being, be a bit careful. I reduced my positions quite greatly, and because I don't want to run into something where the market goes like, oh yeah, okay, this is really bad for euros, and euro yen drops another big figure also. Anyway, I'm long. Where I'm long from? Yeah, from about here or so. So I'm putting like a protective stop, just not to lose money anymore on the original entry either. But I already took a fair few of dollar yen bit. Dollar yen is bit. It's holding the prior break here as well. We had a quick look back at it on Friday, 147. 65, 140, 147 and a half. That is holding right now, and again, Ishiba's troubles will have an impact on that. For the time being, it's not running away. It's doing the same thing than what's happening in all the euro crosses. The euro cross is now holding it back from rallying further. But any like more uncertainty also in Japan is probably going to see this retest the prior high. I would say 149.20, give and take 149.40. That's your next level. Okay, that is probably on the cards for the yen, unless they find a relatively decent decision over there, or decent solution in Japan to replace Ishiba. Azo is one who had already a bit of experience in that role. He also was, as we recall, the finance minister under Abe for quite a long period. So he's got like quite a bit of top level experience. Would he be one that is willing to take the role? We will see. But if Ishiba goes, they will have to call general elections before next year as well. And And that I think is going to outweigh any positives for a temporary solution, because then they, since LDP has lost its majority in both lower and upper house, it could spell more trouble for Japan, of course. Story to follow. Aussie, well, that top end trend line did its work last week, right? We went to have a test there, and then a serious setback. The dollar, the dollar is dominating this week again. Are already trading again under or just under the 65.35.50 zone. This is again your pivot of the day, because we had a bit of a bounce of it on Friday to go back up closer to 66, but it's yeah, the dollar is overarching everything. I think as well, for at least for the time being, until we see all those US data, the winner of all these trade deals is really Trump and his administration. They even if they don't get everything, we know that the aim was to make deals, and they are getting deals done, and they are getting deals done more on their than on their counterparty terms right now. The only big unknown, of course, is still China, but there's enough already showing that the US is really the winner of most of those deals. So this is a dollar play, really, because it hasn't really done much. Even if EURUSD is coming back down a little bit now, it's still trading a bit higher than we were on Friday. So yeah, it's really a dollar play. 65 the figure, 5. 64 three quarters, 64 and a half. Those are going to be levels. I would say 65, the figure, and 64 and a half is one that we really need to keep an eye on for supports here. Okay. Obviously, if we break back above 65 and a half, it will be looking better. Big bit Kiwi had that bounce, was positive. Even we went above this level here, but then on Friday on Friday we already started to peter out. We had a little bit of a jump on the open here, but we can't stay above that 60 30 40 again, and we are already trading back well below 60. We are on a bit of support here around 59.70. Okay, bit of support around here, but again, looking at how the dollar trades, I'm not going to catch a knife on this one. We will have to see if we can get back again to the bottom end of the channel, which comes in at around 59.15. This whole 59.15 is going to be the major support. Okay, if ever this breaks, then probably we are going to be looking at lower levels. But we have seen, and that has been very well respected as well. So respect it. Okay, if we get down there, don't go like all gangbusters if it breaks just a few pips below. Just respect that level if we get there. All right, gold. Gold. Remember what I used to say? If there is less need for hedges, gold should be doing less well. So we had this already on the rumor of a EU-US trade deal, a bit of a setback. We also had these 2 sessions of really heavy buying in the European time zone, and we did not find any buyers anymore. And from Wednesday into Thursday, we're starting to have those rumors about the EU-US trade deal. Besson started it all. We lost that hedging needs support, and now we are just below this trend line. There could be more coming, okay? But also be aware of what happened on prior occasions. Yes, we had those dropbacks. Obviously, we never broke this trend line. So this is something that we really need to pay attention to. 33, 40, 45. We're trading just below, and this is going to be important. And I would say maybe not only on the day, but especially how the market evolves into the US and on the US data. Okay, don't forget that we still have support levels: 33 and a quarter, 33.10, 32.85.90, and then I would say especially here, this one that has been traded around very very well, quite a lot. Here tops, here a zone of a traffic zone, top and break, and then we came back on it, jumped from it, bounced from it. So I think this one here, the 32.45 area in gold, if we see it there, is going to be mega important. Yeah, people will look at the triangle. Okay, this can go back to what is it? This can go back to 2900 or so. Wow, yeah, everything can happen. Okay, but we have difficulties to look out for what's happening in the next 2 or 3 days. So let alone what happens in the next week, but. Shorts will look a bit more positive to what is happening here, already breaking through this trend line. Okay, if we get a break below here 32.45 and we hold below, then yes, we can start to talk about probably this 2900 again, which is about the width of this triangle as well. Silver. I come back to what I usually say. When things are going better, deals are struck. Silver is doing better as well. And I'm just going to show you quickly. I'm not usually looking at it too much, but look at the gold-silver ratio. I'm just going to go on a little gold-silver ratio. When things go better, silver outperforms gold, okay? So things go better. Silver is outperforming gold. Yes, it has the dollar effect on it. Yes, it has the effect of all metals on it, but it's holding better than gold. Okay, we still remain untested. This 37.60, 37 and a half, which is roughly where the channel support comes in, is going to be important. But then the same thing as in gold, we are left with the big support untested. Okay, yes, this is a channel. Yes, we can trade on the back of it, but it's already a bit coming from lower levels and also left untested. Bit of a trend line support around there as well. Call it 37.40.50. I'm going to get interested to see what happens here. I haven't changed my view really. But I'm going to be patient now. I'm going to wait for this 37 and a half. Let's see if it gets tested. It may actually be, if the dollar keeps its beat tone this afternoon, it may be tested there, and then see what happens. Okay, I'm also running there with my very long-term longs, but reduced right now, greatly reduced. And every 30-50 cents lower, there's going to be a support in there before we even run into the mega support now around 35. So every 30-50 cents, there is potential support in silver. Okay, but the main theme around here is that yes, the dollar, but also doing much better than gold. Okay, so this to me, I think, is going to hold it up better than than on gold still. Quick one at the Euro Swiss. It tried, and then now we are back. It's holding, but we had a bit of a setback here down to 93.15.20. It is holding right now, but it's back to neutral, I'm going to say. Okay, it's really back to neutral. It should have been trading much better bid. The long term hasn't changed, still 92.90, but we're having trouble to even keep 93.60. So I'm going to say range, which means that if you trade dollar Swiss, then you are going to have a relative overlay of what's happening in the euro dollar. And as a matter of fact, we've seen it this morning as well. The move down first of all, and then we're seeing the move back up because euro dollar is going down. So your dollar Swiss is really euro dollar, and there we're coming into relatively interesting resistance, which will be again just above the 80 mark, around 80.15.25. We're trading around 80 figure right now, so we've got like interesting resistance coming up on just for the intraday. Okay, for those who do intraday trading. All right, if we need to get back down between below 79.70 to start coming off again. And with that, ladies and gentlemen, let's call it a show for today. Thank you very much for being with me. I will be your host again tomorrow. Have a great week. Don't do anything silly. And we talk to each other again tomorrow. Thank you.